Good morning. I want to call this public hearing of the House Finance Committee to order, and I'll start by having our senior committee legislative assistant call the roll, Lori Smith.
Chairman Samuelson,
Here.
Rep. Abney,
On leave.
Sapita Freites,
On leave.
Tina Davis,
On leave.
Fleming, Gallagher, Gungauer,
On leave.
Harris,
Present
Here.
online.
Krajewski,
Present
Here
online.
online.
Rab,
Present online.
Scott, Vincent,
Here.
Waxman,
On leave.
Webster,
On leave.
Chairman Griner,
Here.
DeVanzo,
On leave.
Fritz,
Here.
Gatos,
She's present online.
Jones,
On leave.
Kephart,
He's
Present online.
Yep, present online.
Kutz,
On leave.
Mako,
On leave.
Rossi,
Here.
Rinkavich,
On leave.
Stamba,
Here.
and Stender.
On leave.
And Representative Webster is present. So all members accounted for. Some of the folks that we announced are on leave. We'll be checking in online, and we'll announce their attendance at that point. Today we're going to have a hearing on House Bill 788, which is co-primed by Representative Mirsky and Chair Griner. And we would like to start with some opening remarks by Representative Mirsky.
Good morning to all of my colleagues and those joining us online for today's hearing. Thank you for being here this morning. Chairman Samuelson, thank you for holding this public hearing on House Bill 788. Chairman Griner, thank you for being the co-prime sponsor of this important legislation with me. I look forward to today's testimony on this important bipartisan bill. I introduced this legislation to address a long-standing inequity in how Pennsylvania taxes our mutual thrift institutions. These are commonly community-based financial institutions, mutual banks, savings and loan associations, and building and loan associations that operate very differently from investor-owned banks. Mutual banks are owned by their depositors, not by shareholders. Their funding is limited to the deposits of their customers, the interest they earn on securities such as bonds, and the money they borrow. Despite these limitations, Pennsylvania's nearly 40 mutual thrift institutions continue to serve as anchors in their communities. They provide mortgages, small business loans, and financial services in areas that often lack large commercial banking options. Yet they are taxed at a rate that makes it harder for them to do that work. Currently, mutual thrifts pay the mutual thrift institutions tax, an 11.5% tax applied to their total net earnings from all sources. This is one of the highest business tax rates in the Commonwealth. This high rate restricts the ability of these community-focused mutual institutions to hire additional staff, expand services, and reinvest in the neighborhoods they serve. House Bill 788 proposes a responsible and much-needed modernization of this tax structure. The bill would immediately reduce the rate from 11.5% to 8.99%, and then gradually lower it over 9 years until it reaches 4.99%. That final rate aligns with the corporate net income tax rate enacted under Act 53 of 2022. Thank you for this hearing today, and I look forward to any questions that you have.
Thank you, Representative Mirsky. And I'd like to call on Chair Griner, the co-prime sponsor of this legislation.
Thank you, Mr. Chairman, and thank you, Representative Mirsky. I know we've been working on this bill together, and I know working with those in the industry. I think this is pretty important, and don't want to necessarily reiterate everything that was said, but the reality is, when you look at businesses here in the Commonwealth, when you look at a tax rate at 11.5%, as was mentioned, for an institution that is not shareholder-owned, but investor-owned, I think it's something that we definitely need to look at, and we need to, as I think the term was, we need to just revisit it. It needs to come more in line with I think, reality and what's going on here in the Commonwealth. So, I'm looking forward to broad-based bipartisan support on this bill. I'm not foreseeing any issues on this, and I'm glad to work with my colleague to try to hopefully get this across the goal line today to hopefully a vote here in the next in the next few weeks when we're back in session. So thank you, Mr. Chairman.
Thank you, Chair Greiner. I'd like to call on our testifiers today, and we have two testifiers. We have John Dill, CEO of Marquette Savings Bank from Erie, Representative Mirsky's part of the state. And we also have Chuck Marson, certified public accountant from Snodgrass out of Pittsburgh. If I could have both of you come up to the table, and we'll have your testimony and then open it up to any questions. And I'll start with Mr. Dill, if the green light, yep.
Thank you very much. Good morning, Chairman Samuelson, Chairman Greiner, and members of the House Finance Committee. Thank you for inviting me to demonstrate the need for the House Bill 788, a reduction in the mutual thrift tax for mutual banks. Thank you, Representative Mirsky and Chairman Greiner, for introducing the bill and continuing to work hard to get House Bill 788 to the governor's desk. We, and all mutual banks, need this bill to pass as soon as possible in order to help many thousands of Pennsylvanians, your constituents. Allow me to give you a brief bio on myself and share a little bit about Marquette Savings Bank. I've been a lifelong banker. Coincidentally, my first job out of college, having graduated from St. Bonaventure University in 1985 with a BSS degree in accounting, was to be the controller at Marquette Savings and Loan, then a $200 million savings bank. I was at Marquette for nearly 3 years before I had the opportunity to join a regional bank to hone my skills in commercial lending. That bank at the time was Penn Bank, which became Integra Bank, and then later became National City Bank, and then broke off into First Niagara Bank and PNC Bank. From there, I went on to join Mellon Bank, who then sold out its retail arm to Citizens Bank. I spent nearly 23 years at Citizens before rejoining Marquette as the Chief Lending Officer in 2017. I was given the fortunate opportunity to act as President and CEO of Marquette since April of 2022. Dating back to my first stint with Marquette, I'd asked myself, just what is a mutual bank? To this day, I think many people don't understand our structure. However, as Marquette continues to do great things in Northwest PA, I strongly believe more and more of our customers, both consumer and commercial clients, have grown to appreciate Marquette and our approach to serving its customer base. Marquette is a mutual bank. We don't have shareholders, as Representative Mirsky said. Our only way to raise money is for individuals to making their choice to deposit their hard-earned dollars into our bank. We're a relationship bank too, and I'll touch upon that in a minute. As a mutual bank, we are taxed at 11.5%, which I believe is the highest rate, not just in Pennsylvania, but in the entire United States. Credit unions pay no tax, which makes competing with them rather challenging for us. We need your help. Not a lot, but a little. If you pass House Bill 788, we can not only compete, but we can do great things to our customers, your constituents. No doubt the big banks have a purpose and do some great things, but I believe you're more likely to see their impact in the larger cities. However, the Commonwealth covers a vast territory, and we're seeing big banks withdrawing from rural communities, justifying their actions to adapt with how people are banking today, because let's face it, people can bank from just about anywhere, or they don't need to come into a branch. COVID has proven that out. Well, it's hard to argue the business practice from a true dollars and cents, but it's likely not the best solution for the smaller communities throughout our great state, which is why I believe mutuals, and community banks too, are the backbone to the communities everywhere. Just a few short 6 years ago, Marquette completed a 15,000 square foot expansion to our main building in downtown Erie to support our growing staff. This new $8.5 million facility is called our Innovation Learning Center and is home to our growing operations, IT, information security, and compliance departments. However, we are most proud of the 5,000 square foot basement area, which is a state-of-the-art training center that supports not only our employees, but is also made available to the public. This 100-person capacity space has provided a convenient location for local nonprofits to use for a nominal fee, or in many cases, for free. Suffice it to say, it's not a revenue generator for the bank. It's another example of how we, Marquette, want to make an impact and give back to our community and to the local nonprofit organizations. Representative Mirsky has toured the facility, and I think he can attest to its beauty. The ILC is something that we're most proud of in many ways. It reaffirms our commitment to Erie and the downtown workplace. It reaffirms our commitment to giving back to the community. And it reaffirms our commitment to financial education and financial literacy. As PPP was being rolled out a few years ago, I found myself conducting a Zoom call with my entire business banking team at 11 p.m. on a Sunday night. So we were ready to go to work for our business customers the next morning. We did not turn away any customer who needed help. In fact, we began to work with small businesses that weren't even banking with Marquette. Why, one might ask? Because their incumbent bank, the big banks, turned them away when these business owners needed their bank through these troubled times. Everyone from the front line and the back office was ready, willing, and able to help our customers, and sometimes non-customers. But to many of these small business owners, we were a lifeline, so much so that little old Marquette Savings Bank in Northwest PA, corner of Western Pennsylvania, was one of 3 banks showcased in an article in the Wall Street Journal for helping small businesses. We went above and beyond, just like we had done during some other troubled times throughout our country's storied history. At Marquette, we talk about customer care. It's because we really, really do care about our customers. As a relationship bank, this is not a slogan. It's who we have been since our beginning. It's who we are today, and it's who we will be as long as we exist. Allow me to share a couple of examples of customer care and going above and beyond. We've had many situations where our branch managers took it upon themselves to take immediate action when situations uncovered red flags for fraud. One example involved a couple who has banked with Marquette for decades and would always come to the bank together. One time, when the wife appeared alone, asking for a large amount of cash, reportedly to surprise her husband with a new car, it was deemed to be very out of character because our branch personnel knew this customer and their typical behavior. When the branch manager was made aware of what was happening, she called the husband, who confessed he believed that they were involved caught up in a scam. Soon after, when the husband stopped answering the phone, the branch manager and her assistant went to their house, literally unplugged the computer where they could see the fraudsters in an active takeover of the computer. Another example involved a local businessman that found their checks being diverted in the mail, washed, altered, and then fraudulently deposited elsewhere. By taking the time to report this case to the United States Postal Service fraud site and working with our local representatives at the FBI and police departments, we were instrumental in getting a federal subpoena issued to help investigate a crime ring, and we were also able to get money back for that customer. Quite honestly, there are many more examples just like this that my colleagues perform each and every day that the world just doesn't know about. If you were to read our mission statement, it focuses on colleagues, customers, and communities. We don't exist if we don't have employees that do all the great things for our customers each and every day. And we don't exist not for our customers who appreciate what we as a bank do for them every day. That said, I believe Marquette does a great job in rewarding our employees and for creating a healthy work environment, one with a great culture and a great deal of transparency. This is evident by the fact that Marquette has ranked as one of the best banks to work for, both within the Commonwealth and on a national level in each of the past 7 years, with our best ranking coming in the Commonwealth at number 3 in 2023, and on a national level at number 8, also in 2023. Last, and certainly not least, we invest back in our communities. Over the past 5 years, Marquette has donated over $500,000 annually. That's each and every year, not just a one-time event, to nonprofits and other organizations that do great things in our communities. Often, the good deeds or great things these organizations do may go unnoticed, but not to us. We see the value they bring to our communities. Helping these organizations the way they do broadens our reach and enhances our impact, as well as their impact where we live, work, and play. These dollars do not include more than 3,500 hours our employees have volunteered with local nonprofits and other worthy organizations in each of the past 3 years. Included in those numbers are 160 hours devoted solely to financial literacy, having worked with 10 different schools in our communities. These numbers are likely to grow again in 2026. In closing, when reading the House bill for the reduction of the mutual thrift institution tax, it states, "For the privilege of doing business in the Commonwealth." I will tell you this, it is a privilege to do business in the Commonwealth. However, it is an uneven playing field when credit unions are allowed to operate without paying any tax and mutuals are burdened with this mutual thrift tax. Marquette doesn't have its name on any major sports team ballpark or football stadium like other banks and credit unions do. That's not the kind of brand that we want to be known for. Instead, you'll find us in local programs, on T-shirts supporting a local cause, or other functions that are very important in our communities. Reducing the mutual thrift tax will go a long way to helping Marquette Savings Bank and other mutuals to continue to do great things and allowing us to remain relevant. By passing this bill together, we, and that includes all of us, will do great things for our employees, our customers, and our communities. Thank you very much for having me here today, and I'm happy to answer any questions.
Thank you very much, Mr. Dill, and appreciate your testimony, appreciate your record of service to your community, and speaking out on behalf of community banks all across the state. We believe there's about 40 community banks that would be impacted by this legislation. I am going to open it up to questions, but first I'd like to call on our other testifier, Chuck Marson, Certified Public Accountant from Snodgrass out of Pittsburgh, and we have a copy of your testimony here in our packets.
Thank you. I'd like to thank the committee for having me here to speak out or to speak for this bill and for the Pennsylvania thrifts. I am a practicing certified public accountant with 35 years of experience. 30 of those have been with a client base made up almost exclusively of banks and thrifts, much like Marquette. My firm, Snodgrass, is a Pittsburgh-based public accounting firm known for its specialty in the banking industry. We've worked with over 175 banking institutions across 16 different states. I have worked as an advisor with thrifts and banks on all areas of tax issues over my time, including tax preparation, planning, compliance, and similar areas. I have personally worked with over 70% of the mutual thrift institutions that are subject to the Pennsylvania Mutual Thrift Institutions Tax. I'm testifying today in this public hearing regarding HB 788 to provide information related to the tax landscape under which mutual thrift institutions in Pennsylvania operate and how this compares to that of their direct competitors, Pennsylvania banks and credit unions, as well as other businesses operating in Pennsylvania. Thrift institutions are very similar to community banks, with the key difference, which has been pointed out already this morning, being that thrifts are owned by their depositors, not by shareholders. Thrifts are also designed to emphasize service to the individual consumer rather than commercial businesses, with regulatory requirements related to levels of consumer and home mortgage loans compared to commercial loans. In Pennsylvania, thrifts are subject to a different tax system than the corporate net income tax other non-banking businesses are subject to. The tax that Pennsylvania thrifts are subject to, the mutual thrift institutions tax, is also different than the tax that Pennsylvania banks are subject to, which is the bank shares tax. And credit unions typically are not subject to any income tax. Of all the different tax structures available in Pennsylvania, the mutual thrift institution tax not only has the highest tax rate, 11.5%, but also has remained essentially unchanged since its enactment in 1964. While the corporate net income tax and the shares tax have both seen significant downward changes benefiting their taxpayers during that time. The current mutual thrift institution rate is 11.5%. The current corporate net income tax rate is 7.49% with a scheduled reduction to 4.99% by the year 2031. The current tax rate for the shares tax, which is a tax on capital rather than income, is less than 1%. There is also a significant disparity for Pennsylvania thrifts related to the use of their tax losses. Businesses subject to this corporate net income tax in Pennsylvania are currently allowed to carry forward an incurred net tax loss for 20 years to use to help offset future taxable income. The bank shares tax, since it is a tax on capital, essentially allows a benefit of loss in the year that it's incurred. The current mutual thrift tax law allows for just a 3-year carry forward of an annual net loss, with any tax benefits from that loss being eliminated after 3 years. The 3-year period thrifts are subject to makes it much more likely that a Pennsylvania thrift that incurs a tax loss for a year will see no future tax benefit related to that loss when compared to Pennsylvania banks and other businesses. This is especially relevant when viewed in relation to new startup de novo institutions, which typically can expect to incur tax losses during their initial startup years and typically don't start to generate taxable income until years 4 or 5. When the mutual thrift institution tax is compared to other states, the disadvantage Pennsylvania thrifts operate under is just as evident. While each state has its own separate rules for taxing financial institutions, the 11.5% mutual thrift rate is among the highest state tax rates imposed. For example, the maximum state tax rate for New York institutions is currently 7.25%. And in New Jersey, the maximum tax rate community banks can expect to pay is 9%. On average, the state tax rate institutions are subject to when they pay state income tax is approximately 6%. A comparison of the loss carry-forward periods of different states also provides a similar result, with most states either conforming to the federal treatment of having an unlimited carry-forward period or having carry-forward lives similar to what Pennsylvania gives to its corporate net income taxpayers, 20 years. Pennsylvania thrifts are vital to the banking needs of Pennsylvania residents and small businesses. Their focus on home ownership and the needs of smaller businesses provides a valuable resource to the communities in which they operate. The ownership structure of thrifts also lead to profits they generate to be more likely reinvested in their community rather than returned to individual shareholders in the form of dividends, since they, in fact, have no shareholders. Given the important role thrifts play in their communities, the provisions included in this bill, reducing the tax rate for thrifts and increasing the tax loss carry-forward periods, would significantly impact the ability of these thrifts to compete with other lending institutions, as well as institutions in other states, and allow thrifts to continue to impact the Pennsylvania communities in which they operate. My concern is that if the tax rate reduction and loss carry-forward provisions included in this bill are not passed in a timely manner, Pennsylvania will most likely see more mutual thrifts fail or get acquired. This will mean less opportunities for lower and middle-class Pennsylvania taxpayers to purchase homes or start small businesses. In addition, if the current environment continues and the tax disadvantages for Pennsylvania thrifts remain, more thrifts may decide the best course of action is to be acquired. And in the case of a credit union acquisition, which is becoming more and more typical, Pennsylvania will recoup no tax revenues from that institution going forward. I would like to thank the House Finance Committee for the opportunity to provide this testimony on House Bill 788. Your consideration and efforts regarding the issues Pennsylvania thrifts face are greatly appreciated. I am also happy to answer any questions any of you may have. Thank you.
Thank you very much, Mr. Marston, and we will open it up to questions. I do want to note for the record, Representative Waxman is present and Representative Cepeda Freitas is present online. And also we have some information in the packets for the members from the Pennsylvania Department of Revenue about the Mutual Thrift Institutions tax over the last 20 years. Many years where that tax had an impact to the state of about 15 to 20 million in recent years, 33, 34, 38 million just 3 years ago. The bill, as proposed, has a 9-step reduction in the MTIT tax. As you recall, we did reduce the corporate net income tax in 2022, and that is being reduced over 9 steps up until the year 2031. One thing about this bill, we're going to consider an amendment. This has a 9-step reduction taking full effect by 2033. Step 1 would have been 2025, so I think we'll have an amendment to make it effective, the first step in 2026, but still keep till 2033. The impact, we did get a note from the Pennsylvania Department of Revenue about the impact if this bill would pass and become law. The fiscal impact on the state is about $7.5 to $9 million in the early years, and by about 5 years from now, about $13 or $14 million. So that information is in the packets as well. I do want to thank the community banks for your leadership all over the state. Every one of us has a community bank in our area, and we can see the impact. We know the small business customers you work with. We know the personal attention you give to consumers. We know during the pandemic, it was often the community banks that were at the forefront of providing assistance and lending to small businesses and individuals, and we really appreciate that. And I appreciate the stories you mentioned, Mr. Dill, about going above and beyond to take care of your customers. I do want to open it up to any questions from members of the committee. Representative Fritz.
Mr. Chairman, thank you, and I want to agree with you that having strong community-based financial institutions is a game changer. They really are the glue that holds together a community. We're lucky in my hometown we have 3 such community banks, the Holmesville National Bank, the Dime Bank, and the Wayne Bank, and they really are. It's a focus on relationship banking. So, Mr. Chairman, I think that you mentioned in your opening remarks that this impacts about 40 institutions in Pennsylvania. Is that correct, Mr. Chairman?
Yes, that's the information we have from Department of Revenue.
So my question is this: if we see some more agreeable tax rates, is there a prediction that perhaps we could see more of these institutions in Pennsylvania?
From my perspective, I think that would be great. Having worked at a larger commercial bank, and believe me, they do great things. I prospered in my career, and they do serve a purpose. Having been back at Marquette for the last 7 years, I truly see the impact. And as Mr. Marsden talked about, was that, from a de novo standpoint, you could see new startups. There was one in Vermont, but this would do great things in our state. And I'm a big believer. I wish there were more mutuals, because our focus and our purpose is not the shareholders, it's the community. And we can do great things when our focus is the community. And the reach is much broader. And I'd say sky's the limit, but I would see that benefit over time, absolutely.
Was that very philosophy that we want to foster? And a tip of the hat to Rep. Mirsky for bringing forward this bill. Happy to support. Thank you, Mr. Chairman.
Thank you, Representative Fritz. I have a question from Representative Harris online. Representative Harris?
Yes, good morning, Mr. Chairman and colleagues. My question would be, and I commend community banks. We would think credit unions would be more community friendly, but I found out community banks are more friendlier than credit unions. That's for sure. My question would be, we have a large populace student loans out there. People are swamped, and I heard your comment on the community benefits agreement, and I commend you for that. To look out for the community. So my question would probably be twofold. One is, how could banks, or particularly community banks, be more helpful in paying forward if you're going to have a lower tax breaks to help people refinance their student loans, possibly. And even if you have to work with them if they're in default, they're just trying to, pay if they're trying to pay. Another thing, and would it be wise for people that's out of the geographical areas of a community bank, could they still bank with a community bank, although they're not in that geographical area? And that's my two questions. Thank you.
Thank you. And I'll call on Mr. Dill. I do want to note for the record, we did pass a student loan interest deduction in Pennsylvania for the first time. It's effective this tax year as people are filling out their tax returns for 2025 before April 15th. For years, you've been able to deduct your student loan interest on the federal tax return. Now in Pennsylvania, thanks to Representative Isaacson and this committee and the full House of Representatives, that is now law, and you'll be able to deduct that on your state tax return as well. But I do want to call on Mr. Dill for a response to Representative Harris out of Philadelphia.
Certainly. Thank you very much for that question. As it relates to student loans, each institution might have a variety of products: auto loans, student loans, wealth advisors, things like that. From Marquette's perspective, we're pretty simple. We have mortgage loans and savings and CD products and what have you. I've often used the expression "stay in your swim lane," and there are institutions out there that do a great job in providing that student loans. If you think about it from a community bank perspective, that is unsecured lending. All right, there's levels of risk with that, and so we try to utilize our capital to the best of our ability. We've been great at doing residential loans for many, many years. And for now, I think that's going to be our focus. I do think that there needs to be the avenue, and there are avenues for young adults to obtain student loans. I have 3 kids that went through college. I utilize that system very, very nicely. And again, I think there's products and services out there that allows many options for people to take advantage of. As it relates to Marquette, maybe that's a product that we'll offer down the road. As it relates to the lending piece, I think we continue to focus on our area. We're huge with financial education and financial literacy. The First Front Door, there's many loan programs that we bring available to new homeowners. For a couple times a year, we'll have a First Front Door, or we'll have an educational program that's held on a Saturday so our customers can come and learn about buying a home. And I think that allows us to bring people the opportunity. There's loan programs that the state offers that we act as a conduit to bring to these people that makes buying a home more affordable. And if we continue with that mission, I think we create greater opportunity for home ownership. As it relates, sir, to your question relative to what could we do, similar to I mentioned earlier, we give to local nonprofit organizations to help them broaden their reach. I think by us having a lower tax bracket for the mutual thrift tax, that gives us more dollars. And again, because we don't have shareholders, our focus is the community. One of the things I often tell our people, we have to remain relevant. We have to stay up with the Joneses. We have to invest in technology each and every year, millions of dollars. Some organizations, the large banks, they have budgets that are bigger than our bank. I mean, we're $1.3 billion. The banks have budgets that size. We're doing all we can to bring technology and banking with us easier. As it relates to anybody that doesn't live in our own backyard, the benefit to technology today allows people to bank anywhere, and we have those products and services. So somebody doesn't have to live in northwestern Pennsylvania to bank at Marquette.
Thank you.
Thank you.
Thank you, Representative Harris. Just open it up to any other questions. Representative Webster?
Thank you, Mr. Chairman. So I support this bill, and I'm going to ask you a question that comes, I feel like I'm asking it in a negative way, and I don't want it to resound that way. But I'm doing some math in my head, and in 9 steps, if the cost to Pennsylvania in terms of tax revenue was about $14 million, that's almost negligible to the state. And well, revenue to the state is important. We have to find ways to invest in Pennsylvania, but probably that doesn't tip the scale in this case. But then I thought to myself, well, if there's 40 of these institutions in Pennsylvania, that's less than $200,000 per institution that it's saving you. But that could be really relevant in terms of the budget you're talking about. So talk about how meaningful that really is.
Well, it would be meaningful because it allows us to do more things. Just this year, we rolled out our Empowered U. So Marquette, we're known for Marquette. We have empowered products, and we have an Empowered University, Empowered U, to reach students the ages 13 to 22. And we're bringing that in because we believe in financial education and financial literacy. And quite honestly, and this is not a criticism of many people, but understanding banking is not easy. Many people don't. And we believe that the sooner we get to that younger age group, the better. That program, to launch that program, costs us $40,000. What we're doing is we're incentivizing these young students to go online. They have to open up a checking account, open up a saving account, and then they take educational courses on finance, banking, and they learn. If they do that, they receive $100 in their checking account from us. To date, we have paid out nearly $15,000, $14,900 in the first year. We also, to incentivize people, anybody that participated, signed up, opened up the accounts, and completed the course, they were entered into a drawing. Somebody received a new iPad last year. That's $1,500. We're doing all that we can, and I think the savings. If you look over the last 10 years, I had my CFO calculate it. Marquette would have probably saved $1.8, $1.5 million over the last 10 years had this been enacted. All right, those are significant dollars to us. $200,000, as you point out, Representative Webster, that's a lot of dollars. It allows us to do more of those things to help our customers, whether it's the younger generation or even the older generation. I can get into the fraud situation and fraud prevention. My example is real. We have many of those stories. I shared with some Representative Mirsky this morning. If you go on our app, and every time you go on our app, whether it's on your computer or on your phone, there's a note. The first thing that you see is, please do not give out your password to anybody, all right? We are receiving complaints from customers saying, why do I have to click on it? And it is literally a 2-second click, all right? My chief of deposit operations says, I will take it down once we have 3 consecutive days where a customer did not give out their password. And it's still up there. So, so sometimes there's only so much we can do, but we're going to do all we can to educate and help our customers.
And if I may add one thing, just to add some color to those 40 institutions. It is true there's 41, 40, somewhere in that range. But there's really 2 groups. There's the top 3 are, if not at, well above $5 billion in assets. If you take those 3 out, you're talking about institutions with under $1 billion, in some cases under $500 million. The tax savings that you've calculated are probably somewhat accurate on average, and that, after those 3, make a huge impact on some of these institutions.
Mr. Chairman, I just looked in my House district, Harleysville Savings Bank is our community bank, and their website opens up with cybersecurity awareness. Please, we would never ask, et cetera.
There you go.
So you're right.
And thank you again for what you're doing on security, financial literacy. Based on our education code a couple of years ago, we now have a graduation requirement in our schools for financial literacy effective in 2027. So I expect a lot more partnerships between community banks and our schools in the years to come. Do you want to open up to any other questions? I do have one about the NOL provision in the bill, the net operating loss. The current law allows a 3 years for net operating losses. The bill as drafted says 10 years, but I'm going to ask Mr. Snodgrass, I know you said sometimes it's 4 or 5 years before, I'm sorry, Mr. Marston
That's okay.
from Snodgrass.
Not the first time, that's fine.
Mr. Marston, there might be 4 or 5 years before a bank starts to make a profit. We're considering an amendment to take the current 3 years and make it 6 years, and I just wanted to ask your perspective on that, whether that would be adequate to update the law.
It would certainly help in the area of de novo banks. As I said, when you compare it to any other business in Pennsylvania who's currently getting 20, and the federal rule of an unlimited, and what all of the other states are doing, it would still have you at the bottom of the list as far as the amount of years you're allowed to benefit from it.
But there are situations where, with the current 3 years, a community bank does not have the opportunity to take advantage of the NOL.
Absolutely, and to go back to one of the earlier questions about new de novo, would this bill increase new mutual thrifts? There's a lot that goes into play there. One thing I can say as a tax professional, if I were sitting down with someone who wanted to start a new business, I would be hard pressed, given the current tax laws that Pennsylvania thrifts are under, to even try to recommend a thrift as being a startup that would make sense because of that 3-year carry forward and the large tax rate.
Thank you very much. And I just wanted to go back to Chair Greiner, the co-prime of this legislation.
Yeah, just to maybe close it up, I thought both your testimonies were outstanding, very informative. The one thing, particularly with your bank and being a CPA myself, is the financial literacy part. I do think, and when what you talk about on the website with the fraud, I think we're dealing with a lot of that. And I do think, getting back to what I said earlier, I think there's a niche for you, the 40 banks here in the Commonwealth that serve the community. And yeah, I know we're struggling with revenues, but I do think in order to be more competitive and to provide for the people in our areas, I think this is an important first step. And like I said, I know I've been working with the bankers and, of course, Representative Mirsky, and I thought this was very informative and very helpful. And I thank the chairman for having this hearing as well. So thank you.
Thank you, Chair Greiner. Thank you, Representative Mirsky, for bringing this bill forward. Our next scheduled meeting is next Wednesday, February 4th. I do want to mention again, any time we would vote on this, the amendment deadline would be 24 hours in advance. Two amendments we're considering at this time are jumping ahead to year 2, 2026 on this schedule. You can see the 9-year schedule, but keeping it so that the rate would be down to 4.99% by the year 2033. And also that change in the NOL to possibly go from the current law of 3 years to 6 years. Please feel free to reach out to Chair Greiner or myself. With no further business, this meeting is adjourned.